You're listening to The Moose and the Loose, your 10 minutes action-packed financial podcast with your host, Mikey Hu. Hey, what's up, Market Moose? Mike from The Moose on the Loose. I hope you're doing well this Thursday. Yesterday, while everyone were cheering, a few of us were weeping. I was under my desk and weeping and didn't want to talk about anyone. All right, I'm joking a little bit, but I'm not talking about the election either. I'm talking about the stock market, because yesterday the stock market was on fire. After election day, the S&P 500, the Nasdaq, the Dow Jones, even our Canadian index, the TSX, were all up like big time. All but one, or a few stocks, of course, but one in particular, Stella Jones, down 14%. While everybody was cheering, this one took a major hit. So today we're going to take a look at what happened on Stella Jones yesterday. Trump said, we're not going to buy woods anymore. Not exactly. So we're going to look at the results. We are going to look also about the guidance, and we're going to also look about the potential impact. So the tariffs, how it could impact Stella Jones, and if it had anything to do with seeing such a great company dropping by 14% yesterday. But before we dive into this, let's talk about Stella Jones for a second. So Stella Jones, roughly $4 billion in market capitalization, trading on the Canadian markets, on the TSX, 45 wood treating facilities, 29 in the US, 16 in Canada. 70% of their sales are coming from the US as well. So what do? Well, they sell utility poles, which is almost close to 50% of their sales. So those utility poles that are, that's great because it's like recurring purchases. Every time there's construction, you need more of those. So a good part of the business is those utility poles. In second position, you have railway ties. So similar, like with the maintenance, with the large assets that we have of the railroad network across Canada and across the US. That's 25% of sales. Then you have residential lumber, so the wood that you buy at Home Depot, Lowe's, Rona, and the others. That is 19% of the sales. You have industrial products for 5%, and logs and lumber for the rest of it, which is another 4%. So long story short, 50% utility poles, 25% railway ties, 20% residential lumber, and the rest is industrial products and log and lumber. So that is the key part is really 75% of the business, which is great because it's not tied with the regular consumers, but rather with infrastructure projects, with towns being built, with maintenance. So a little bit more stable in terms of business. So now, what happened? Well, what happened is Stella Jones reported a bad quarter. Not only a bad quarter, but also bad guidance. And this is usually the point. When you surprise the market, it's already bad. But when you surprise the market and you tell them that it's going to be worse coming up, that's really not good. So Stella Jones reported revenue declined by 4%, but earnings per share tumbled by 26%. So in other words, yes, they had less volume, lower prices on their stuff, but most importantly, they got hit on the earnings. So what really happened? Well, of course, weaker sales means weaker earnings, of course, but the margin were affected by higher expenses and higher financial expenses. So selling and administration went from 48 million to 53, and then financial expenses, so the interest charges that you pay on your debt, from 17 to 23. So long story short, the company is facing headwinds and is also facing increase in expenses. So that led to a not really good quarter if we want to be optimist, bad quarter if you want to be pessimist, but it was not the numbers that you want to see when you are a shareholder. And full disclaimer, I do have Stella Jones in my portfolio, so I've obviously followed this one with great interest. So before we go into the guidance and the impact of the tariffs, I want to invite you to my next webinar that will be called Dividend Income for Life. You can register at moosemarkets.com/webinar. It will be on the last Thursday of November, so November 28th. We are going to talk about the myth of high yield. We're going to talk about how to select high quality dividend stocks, how to build your retirement portfolio, and I provide a full example here. And finally, how to generate your income from that portfolio. So making sure that you're not getting hit by the sequence of withdrawals when there is a market crash, or the fact that you have like several dividend cuts. We're going to talk about all of those topics. So moosemarkets.com/webinar to register. It's 100% free as usual. Now, the worst part was the guidance. So Stella Jones had to announce weaker guidance, particularly weaker sales that will be expected in 2025, mostly around the utility poles. So if you remember the numbers correctly, it's about 50% of the business is linked to the sales of utility poles. And now Stella Jones saying, you know what, our biggest clients are not buying that much, so definitely we're going to sell more. So they expect to have a good margin. So EBITDA margin is expected to go from 16 to 17. Because they focus on their costs and so on, but still sales won't be that great. So what it means is you will see the dividend triangle slowing down. So the dividend triangle, in short, is the combination of revenue, earnings, and dividend growth trend. Of course, if revenue and earnings are slowing down, well, maybe the dividend will follow, but at least two of the three metrics are telling you that they are facing problems. So that explains partially what's going on with the stock. Another thing that explains it is how the ownership is set up. So the thing is, there are a lot of institutional investors. So you can think of like the Caisse de Dépôt that is at 13.6%. You have like Bailey Gifford, an investment firm, at 13.5%. You have Fidelity at 4.30%. You have Mauer at 3.85%. Vanguard at 3.20%. So a lot of institutional investors. So what happens when you surprise those kind of investors? Well, some of them may decide to sell. And it's not the first time that we see Stella Jones stock price moving by high single to double digit in a single day. That usually happens for companies with a smaller market cap. So cannot really say at 4 billion that Stella Jones is a small cap, but we cannot really say it's a large cap either, right? So it's not a big guy. Since you have a lot of financial institutions that own a large part of it, if only one of them decides to sell or decides to buy, it will have a huge impact on their stock price. And this is unfortunately what happened yesterday. So a combination of bad surprises, bad news, bad expectation moving forward, and big guys dropping the balls because they don't want to have this one in their portfolio anymore. So that leads us to the last question. Will tariffs have a major impact on Stella Jones? Because we all know Trump won. He talked about increasing tariffs, so like taxes on goods that are crossing the border from Canada to the US. It may have an impact. However, since the bulk of Stella Jones' business is still in the US, they have a lot of facilities over there too. They could simply increase their volume in the US and do not have to face cross-border taxes. So that is one solution. The other one is utility poles and railway ties, which is roughly 75% of their business, is less subject to competition. There are like less other ways to compensate. So it's not like selling lumber at Lowe's or Home Depot. So it should protect them a little bit more also about the prices. So Right now, I'm not an expert in tariffs, of course, but at this point, I am not overly worried about this point. Unfortunately, I already know now that 2025 is not going to be an amazing year. But if you're a patient investor like me, you do not let you get you don't start weeping under your desk whenever a stock goes down. So I'm not happy, but I'm not concerned right now for Stella Jones. It still has a very solid business model. Still have like roll by acquisition opportunities that is left. The business is well diversified, and because they have a strong footprint in the US, I don't think the tariff will impact them too much. So, all right, Moose, that's enough for today. Don't forget to sign up for the webinar at moosemarkets.com/webinar, and we're going to talk again tomorrow morning. Until then, don't forget to stay invested. Hey, welcome to the disclaimer. If you're listening to The Moose and the Loose, you cannot really expect me to give you buy or sell recommendation or financial advice, right? You're here for fun, you're here for information and some entertainment. But I am not your financial advisor, I am not your broker, so therefore I'm not liable if you're losing money after listening to the podcast. If you're looking for some advice, go see a professional. If not, you can enjoy the show and do your due diligence after it.